Welcome back to another episode, guys. This one marks half a year of this podcast, so thanks for all the support. In this episode, we sit down with GTD, aka the Bear Hunter of 2020. GTD is an experienced equities and futures trader with a background in finance and supply chain. We discuss the rise of retail traders and meme stocks, the illogical success of trading gurus, and why the Fed is always lagging. We would really appreciate a review on Spotify because it really helps boost our podcast. With that being said, let's get into it. Welcome to the show, GTD.
Thanks for having me, guys.
Yeah, for sure. So getting right into it, like around the time that I first started seeing you on Twitter and I met you, it was piggybacking off of the COVID pullback. So I guess since we want to get into like retail and the whole meme stock thing, give us like a little background. Like why was the COVID pullback so quick, and why did that bring so many retail traders in?
Yeah, for sure. So I remember that very specifically because I was heavily short and I caught most of the move down. And I remember on that day, when the market was down huge and it just bazooka reversed up, the Fed basically came out and said that they were going to backstop and just launch a liquidity nuke into the market. As soon as that happened, I think I held my shorts for like another day or two and gave some back, but I flipped pretty quickly and got long. I honestly think everybody's conditioned to believe the market's always going to go up long term, and when you see a 20-30% pullback in the market, and this one specifically was super quick. I mean, it happened within a few weeks. People flooded into the market, and everybody was sitting home, not working from home, and they had a lot of time on their hands. So everybody looked at it as an opportunity, got long and wrote it up. I remember on social media, like Dave Portnoy from Barstool and like all the big faller guys. I mean, it got so nuts that he was picking stock symbols out of a hat to go long on, and they would go up. So, I mean, if anybody was paying attention to the market and listened to what the Fed says, that was their cue to put all of their money in long. The easiest way to trade is listening to the Fed. Like, don't fight the Fed. A lot of people tried fighting the Fed, from the bottoms. They thought the S&P was going to go down to 1,000. And, I saw all the bearish accounts saying, oh, it's going up and now it's going to tank another 50%, blah, blah, blah. And then they just got steamrolled. So anybody who got long and listened to the Fed did very well. And concurrently, if you listened to the Fed in November, December of 2021, you would have knew to exit the market because they said, this is what we're going to do. But people thought the S&P was going to go to 6,000, and they got killed going down this year. So moral of the story, just listen to the Fed.
Right. So that brings up a question. So obviously back in I guess right now, obviously markets are way over liquefied. And we know that now that they shouldn't have printed all this money and they shouldn't have lowered rates as much as they did. And they kind of let us run a little too far. So what do you think, in the perspective of the Fed, in 2020, all these shutdowns and everything, everyone was locked down, all the economy was just taking a big hit. What do you think was the reasoning behind the Fed just to let rates just be so low? And when they were already low, in history, they were already at lower rates before the crash. And then we just basically brought them to zero. Why do you think the Fed did that? What do you think the purpose was in their perspective? Obviously it wasn't the right decision. Maybe it was, if you think that, but what do you think about that?
Yeah. Excuse me for my voice, by the way. I don't know what's going on, but yeah, the Fed is always behind the curve. They will always be behind the curve. They claim to be forward looking. They're not forward looking. They forecast, some of their forecasts are out like a year or two from now. They can't forecast 2 months from now. So, I mean, the Fed is a joke in that regard. If I were them, I would have started raising rates and tapering off at the end of 2020. Because I mean, the market rebounded. They did their job. The Fed's job is to, when we get into like a crisis situation like we had with the COVID crash, they step in, backstop liquidity, make sure nothing collapses. They did that, but they didn't reverse it. And then, coming out of COVID too, like, the Fed is to blame for, part of this, but I think our administration is more to blame, with what we're seeing inflation wise and everything. Like, now the Fed is so far behind the curve that, they're hiking like crazy, like, to get inflation down, which it's not really working. Which I think I said that in Discord probably a year ago. I said, watch, the Fed's going to raise rates and they're going to see inflation's not coming down. So what are they going to do now? But the administration, with the stimulus checks, and that just screwed everything up, in my opinion, because my background's in supply chain. So I've been battling this firsthand for over 2 years now. And when you give a bunch of people money to go out and spend, and supply chains are damaged, like the China ports and all the ports were screwed up, like, it's going to cause a nightmare, right? Because all these companies, have their forecasts built, their models built to account for X amount of demand. You inject a bunch of cash into the system for people to spend. Oh no, my model's screwed up. I better order all this shit. And then, stuff breaks. So yeah, but going back to the Fed, they can't forecast. They're behind the curve. They'll always be behind the curve. That will never change.
Right, yeah, that's a great point. So like, yeah, obviously Sam mentioned that like you got this narrative term of like the bear hunter, and like your comment on Twitter, GTD. We'll probably link that in the show notes for anyone that wants to check out your account. But there's like obviously we just kept running up and up and up, and there was this big like narrative around like, oh, it's definitely going to pull back, like we're running way too high, like it's going to drop again even further, which we're kind of seeing now, but we're still way above the 2020 peak levels, which is still insane to me. But so what like, why'd you like have so much fun doing that, like hunting out bears and whatnot?
It's just, it was fun at the time, because like I said, like if you listen to the Fed, you knew they weren't going to pivot. Every dip was a buying opportunity. And it was just hilarious seeing like all of these FinTwit gurus and, paid groups and perma bears and the whole crowd. Like anytime the market would drop 1%, they'd be like, the crash is starting. So I would just go on Twitter and troll them. And anytime there was a pullback, I would blast them and say, you're wrong, call them depressed, like just have fun trolling them a bit. I mean, if you're not having fun in this, like, I mean, this is a hobby for me. It's not my full-time job. Like, I like to have fun with it. People take it so seriously, and it's just good to have some fun. And, I've been blocked probably by 250 accounts by now just for constantly trolling them when they were wrong. And, I would screenshot their tweets and like paste them on charts and say like market's gone 10% up since you said it was going to crash and all that stuff. But I really, there was a guy on Twitter called the Prophet God, and he was there was a group of people, I followed him, and a lot of people that he called us the church. He was a hilarious FinTwit character, but he disappeared, and he made a call that the S&P was going to go to 4,800 by the end of 2021. He made that call at the end of 2020, and he would do the same stuff. So I learned from him. He disappeared, and he was like, I'm going to be gone forever. Like, it's up to you guys to carry on my traditions. I was like, okay. So I just went out and trolled people. And I think I made a call back in, was it March? I think, no, it was like May or June of 2021. And I said the S&P would hit like 4,700 by the end of the year, which it did. And then I obviously pivoted in November and December, but the Prophet God, he still hasn't made a tweet since then. So a lot of speculation where he's at, but yeah, no, it was just it was a lot of fun. And obviously, if you go through my timeline on Twitter, like I was hunting bears all of 2021, and then from January to probably March or April, I was hunting bulls because I was short the market. So I just pivot.
Yeah. Sounds like you're doing that a lot. It makes sense in these past like months. I mean, I just got into trading, so I'm not really sure. Like, I started probably in 2022. But I'm curious. Like, you mentioned gurus and like how they were so common, and like people just like acted like they knew how to trade, and most of them probably didn't have more than like 2 years of trading experience. Like, I don't know how when you started trading or like following the market, but is there always like this like flux of like gurus that come in and like try to sell a bunch of courses anytime like the market is just running really fast, or is it usually like kind of low key?
After 2020, that's when all of them started popping up like crazy, and 98% of them are garbage.
So it wasn't like before, you didn't see those like ever
Not
before
as
the
many.
COVID
No,
crash?
no, I mean, there's always been some. Like, there's been ones that have been around for 5, 10 years. But no, not like what we're seeing today. And they're going to get wiped out. Like, they're going to lose all their subs because they're losing all their subs money. It it's like a cycle, right? I guarantee, like, if this market like turns down again and makes new lows, or you know goes down a bunch, I guarantee a bunch of them will go out of business. And then the next time the Fed, launches QE again and cuts rates, we'll see an influx of, Furus come in. And, but yeah, I would say like there's some good ones out there, like Ticker Wizards, TJ who runs that. He's legit. Like, he actually trades his own money and, posts all of his trades and, gives ample explanation and teaches. So like there are good ones out there, but they're a dime a dozen. Like, I would say like 99 out of 100 paid groups are a sham, like just complete shit.
Yeah, I guess I was gonna ask you like what's the balance between like being a guru and actually selling a course that's like hopeful and like that you actually have basis to sell. I guess like what would you describe like the medium between that? Like how do you sell a course without being a full-blown guru?
I think you have to, like, I think doxing yourself is important. Like, if you look at some of the successful paid groups, they show their face, people know who they are. And I think that's important. But you got to have a track record, right? Like, I think anybody who's running like a service should, if somebody asks for their like verified P&L, like they should show it. Like, and that's why most of these groups are scams. And like people who sell paid courses or try to teach people, blah blah blah. Like, there's an account on Twitter called Guru Leaks, who I follow a bunch, and he exposes like all of these like sham services and in the market, and he'll ask all the time for all these people's verified P&Ls, and they refuse to give it and block it and all that. So I guarantee like most, if not the majority of these services or people who are selling these courses don't trade. They
Yeah.
either don't trade, or they're paper trading, and they're just living off the sub income.
Yeah, or like you said, they're not even using their own money. They're just using the absurd money they make off of their subscribers.
Yeah. Case in point, Sam, Smarter Trader. I hate that guy.
Scams are just awful, man.
Yeah, he's terrible, and he can't spell. He's an idiot. He at one point he was making like $1.5 million a month off of sub fees, and there's actually a few like parody accounts of his that pay for his subscription just to like screenshot all the stuff in his chat and like post it on Twitter. and he's blown his account so many times, and he's also been caught paper trading. So it's just like it's just funny. I mean, I like all these accounts that are like trying to take down all of the bad actors in the space, because like I think it's a good service, like if somebody's honest and doing it right, and like, you know, teaching people the right way to trade and risk management and all that. Like, you know, if somebody's good at that and can teach it and all that and help others, like I think that's great. But the space is just tainted with so many bad actors that are taking advantage of it. And that kind of pisses me off.
Yeah, so you mentioned that like so many of these gurus popped up piggybacking off that COVID drawdown. So I guess like that was when so many retail traders and investors started coming to the market too. So could you like give a background of why you think all those people started coming into the market?
Yeah, I mean they were getting money from the government, obviously. So like, I mean, a lot of people who had no experience, and then at the same time, like they started seeing all these stocks go crazy, right? Like you saw Overstock, for example. I think at the COVID lows was like $1 a share, and it went up to 120. And that's 120x on shares. So like people started seeing these insane bounces. They're getting, you know, government stimulus checks. Oh, Robinhood is popular now. You can just auto deposit right into Robinhood and get instant access. You know, you got Portnoy and people like normalizing trading. So like that money just all flowed into the market. And at the time, stocks did only go up. So like people were just buying, making hand over fist. It would be very interesting to see, like, I wish there was a way we could see like how many traders, you know, got in the market, built their accounts up to like, you know, a good amount where they could, you know, let's just say 6 figures. I wonder how many of them are still around. That would be a good data point to look at. I don't know how to do that, but I'm just thinking.
Probably not a lot though.
No, probably not.
Most everyone got destroyed like at the end of it. And do you think why do you think people still stayed with like these gurus, like even after like there was all this like stigma around it, and like obviously they weren't doing anything, but like what do you think people were just like blindly putting their money in, like just copying every trade they gave out? Or like what do you think was the psychology behind people in gurus?
Yeah, I think it's interesting because, and this is my opinion, but like let's take Sam, Smarter Trader, for example. He gives out like everything he plays is like a weekly option, like just degenerate lottos. He gives out like 10 trades a day, like insane volume of trades. Let's say, you know, a sub takes every one of those trades, he'll probably lose 9 of them, but the one he hits is like an 8-bagger. So he'll lose a little bit of money, but he'll see 800%, and he's like, oh, I hit an 8-bagger. And meanwhile, his account's like slowly dwindling. He's paying monthly fees, but like, I think it's a psychology thing, honestly. Like, if you hit like a big trade, you're like, oh, thanks, Sam, but I'm gonna forget about the 8 others I just lost on. Like, I honestly think like it's a psychology thing, and like a lot of these people are like just blind loyalty, and like I don't know if it's like a like if they treat these gurus as like celebrities or something, and they're just like they want to be part of it. I don't know. It's a bizarre thing, because if I paid somebody to learn how to trade or follow their trades and I lose like 4 out of 5 trades with them, I'm like, bye. This was a waste of money. But it's really bizarre to me. I don't know.
Yeah, I feel like it's more of like a confirmation bias of like, if you join a course and you're like, okay, I like the work, quote unquote, I like the work this dude does, and I want to pay money for his course. And like, you're telling yourself that he's like a good trader, and then you put money towards it. And then that's a sunk cost towards that. And then you're like, okay, well, I just put money towards this guy. He's probably a really good trader. And you just keep believing that because you put money towards it. And you want to keep telling yourself like, oh, this guy's really good. This guy knows what he's doing. I paid $300 the past month, and I'm not going to leave the course because I really like what he's doing.
Yeah, no, exactly. Yeah, I think that's spot on.
Yeah. And so that brings us in like with all the retail traders, obviously, then came meme stocks and was just a whole nother story. And basically just, can you summarize like what a short squeeze is and like what was like the battle against retail and then the battle against like institutions?
Yeah, for sure. So yeah, a short squeeze is literally what it sounds like, right? There's and we'll take GameStop as the example, I guess, because that was, the epic one. But it's with and GameStop was, a Left 4 Dead retailer, like nobody's thinking of them. So like for big funds and institutions, it was an easy short because it was going down to, I mean, it was, everybody thought it was going to go to zero. But yeah, a short squeeze is when a lot of shares are short and somebody takes notice, and everybody thought that it was retail who caused that squeeze. It wasn't retail. Like, retail is just a scapegoat. Like, there's no way retail had the firepower to cause a short squeeze on, a multi-billion-dollar market cap stock. But when price goes up and, it gets to a certain breaking point where, a fund who's short is getting margin called, they have to liquidate that position. When they liquidate that position, it's treated as like a market buy, and that pushes price up. And then the next fund who is short, they get margin called. They liquidate, then it just cascades. And then you also have people chasing the squeeze and adding buying power, and it just catapults price, right? GameStop was crazy because the one Discord I'm in, one of the guys actually came up with the Wall Street Bets post for his theory behind it. So that Discord made hand over fist. There was a guy in the Discord who, at one point, he turned $80,000 into 360 million.
Oh,
yeah, that never got out anywhere. I'm not going to reveal who it is. He didn't want to share that with anybody, but yeah, I remember we were in, I think I had 10 or 12,000 shares of GameStop at $5, and I sold at 12. Yeah, feels bad.
Did you get back in?
What's that?
Did you get back in after you sold those shares?
No.
You did. Dang.
No, I did catch the first Bed Bath & Beyond squeeze though. That was my version of GameStop. But yeah.
What was I gonna say? That's what I was gonna ask you. I remember you had you had made some, I remember you telling a story about I think you said don't make the mistake of telling your wife about your best trades, because you did that with Bed Bath & Beyond, and next thing you know, you were buying all sorts of new furniture.
Yeah, exactly. Yeah, I don't tell her anything now. Yeah, it's just like bad luck too. Like, anytime I've said like, oh, I made this much in the market on trade or whatever, like I end up giving some back, or I end up like buying or something and then losing money, and then I'm like, oh shit, I just lost double. But yeah, no, Bed Bath & Beyond was that was a fun one. That was I started doing the due diligence on that one at Christmas at 2020. I had gone to my sister's wedding, and I got back into town and I wasn't feeling great. And so I isolated, and I was by myself, for about a week through Christmas. So I was like, all right, I have nothing to do, like time to start looking for stocks. And I saw Bed Bath & Beyond had like 80%, or it was like 70 or 80% short interest. And that was when GameStop just started to get going. I think it was in the low teens. And at the time, yeah, I think it was like $15 or $20 a share. But at the time I was like, I missed GameStop. It's up like 4x. So I'm not going to chase that one. So I got to find something else. And Bed Bath & Beyond was like $14 a share, and it had moved a little bit, but nothing crazy. So I spent like a few days just like researching it and everything, and doing some DD on it. And I was like, oh, this could be a good one. So I loaded a bunch of calls for I think February expiration, and I think I only put like $2,500 in it, nothing crazy. And ended up flipping it to, or no, sorry, I put 2,500 in options on my Robinhood account, and then on my TD Ameritrade account, I think I put like 20 or 30 grand in, and ended up coming out with like 150K when it was all said and done. And then I gave back 50K chasing Riot. That was like, that was, it was so dumb. If I would have I went like a day or two expiration and dropped like 50K on calls. If I would have went another week out, I would have flipped that probably into like 1 million, because that was like the week before Riot went up, like went on that epic run to 80 or whatever it did.
Yeah, I mean, either way, like congrats, because that's insane. But you mentioned a few times like how you didn't want to like chase some of these stocks that were already up a bit, but like that's literally the entirety of what retail was doing, and everyone posting all over like the social media is like, oh, like get in early and all this like cringy things. So like, did you see like the gurus back then? Were they also like putting all their followers onto these, and like because they were going up, their followers or their subscribers thinking they like knew what they were doing? Like, was that happening back then too?
I'm sure it was. I was so caught up in, my own play, I wasn't really paying attention to anybody else, but I'm sure they were. I mean, everybody was chasing it. Everybody thought it was going to double again from there, whether that was, Bed Bath & Beyond, AMC, GameStop, whatever the case may be. But people got burned on it. That's why the whole super stonk came from, because everybody was bag holding their GameStop that they bought at 300. So, I mean, you see the same thing just happened with Bed Bath & Beyond again. It went up 4 or 5x from the lows. And then all of a sudden you see the Reddit crowd piling in at $25, $30. I mean, I saw posts, people taking out loans to buy it at $25. And I'm like, all right, this is not going to end well. And then, of course, Cohen sells his shares. It's down like, I think it's down like 50% right now in pre-market again. So it's just brutal. Hit the bell. But yeah, I mean, I think people need to understand that, this isn't a game. Like, people lose money being stupid, and somebody's out there trying to take your money. That's how you gotta treat it.
Yeah, that's a great point. And I mean, we still see like just recently, like transitioning to more like relevant news, we still saw like you were saying, like AMC and like all these things are squeezing up. I don't know, you've probably seen it, you're active on Twitter, like the chart where they overlay a chart from the 2008 crash, and then they overlay it from the current crash now. And like we peaked, and then we came down where we like dropped below like that supply zone, and then we're finally coming back up again, and we're here in a supposed another area, a pivot where it's going to go down even further. And like, obviously the Fed, they've been tightening a lot, and inflation has come down, but only to 8%, which is still 4 times their target percent. So I don't know why people are so celebratory over that. But what is your thoughts on like the next move here? Do you think we're moving higher, or do you think the Fed's going to keep tightening and it's going to bring it back down?
They're definitely going to keep tightening. I just don't. We're in a tricky spot, because there's like, the Fed sending mixed signals. The wording that they're using right now is like, I can see it from both sides, right? Like, I don't think they're going to pivot like very soon. Like, everybody thinks they're going to just like start cutting rates. I don't think that's going to happen, but they're starting to add language in, like, we want to make sure we're not over tightening or like raising rates too much. So I think what's going to happen is they're gonna hike 75 again in September, and then they're going to pause for a while. I don't know if that's going to be for the rest of the year, or maybe until January to see the data. But it's a really tough spot in the market right now. I favor the downside. Like, we just hit the 200-day. rejected, I think twice. And now I think we're down like 1% today. I can make the case for higher in that just based off sentiment. I feel like everybody is saying we're going to crash back to the lows here, and like everybody is short. So I could see a pain trade that's higher, maybe like 44, 4,500 on the S&P. Get everybody to think that, you know, a new bull market starting and then snap back lower. But I could also make the case for us just, you know, going lower now. This is probably the hardest spot it's been at this year. Because like I rode the market down for, you know, the first half of the year and then pivoted in June. And now it's kind of just limbo. I'm not really making too many swing trades right now. I'm more just like scalping futures and trying to get a few points a day and calling it a day and just, you know, saving cash. It's tough right now. It's tough.
Right. Yeah, it is. And you mentioned a great point, how the Fed, they aren't really being too they aren't choosing one side or the other, to kind of just like being really generic in what they're saying. And I'm curious, like obviously there's people in power and they have a lot of control over the country. And I don't know, I personally believe that if someone's in power and they might value their seat over the overall economy, like if they can stay in and the economy might get tanked a little for another few more months than it needs to be, and they keep their seat because of it, or they do something wrong or they're lagging behind, they might do that. So what are your thoughts? Like, do you think that the election, obviously it's just midterms, it's not like a presidential year, but do you think that elections this year is like reducing like the urgency of the Fed right now?
Yeah. Back in June, I said I thought that we would have a multi-month rally into November midterms. And obviously we've seen, you know, 2 months of just rallying. These midterms are very important, you know, for both parties. So everything that they're doing right now, the Fed, the government, everything is for midterms. Like you see Biden draining our, you know, strategic reserves every day to lower gas prices, which it's working, but at the same time, we're draining our entire reserves to do it. The only reason they're doing that is for midterms. The Inflation Reduction Act, that's going to raise inflation. That's another one. It's just everything's a mess right now. That's the best way I can put it. I mean, you see this morning, Germany's inflation came in at like 38% or something, or their PPI came in at 38%. Europe is screwed right now with their energy crisis. Still got China and us playing teeter-totter with Taiwan, Russia, blah, blah, blah. This is just a weird time right now. And then you got our midterms. So
yeah, it is kind of crazy. The rest of the world is just kind of like the dollar is rising. We just passed the euro for like the first time. I think it was like in over a decade. I think that might not be accurate, but we like just passed them, which is insane. And all these other countries and third world countries are just collapsing right now. Like their currency at least is. And like the US is we're kind of stabilizing a little bit right now. But that you brought up the Inflation Act. And did you get like a good look at it? Like, did you read through it a good amount?
I didn't read through all of it. I saw some snippets. Like one thing I saw, and I don't know how true this is, so take it with a grain of salt, but something about taxing the middle class more, even though Biden said that we wouldn't raise taxes for anybody making under 400K. I saw that. And then I saw, this one was funny. I saw a EV credit of $7,500 if you buy an EV. And then I saw Ford raise their price by $8,500. So I'm like, okay. So that was useless.
Ford's been in the market long enough to know these like subsidies.
Yeah, I mean, they're all going to do it. So it's
yeah, it doesn't. I was watching
politics so much.
I was watching an All In podcast. I don't know if you've seen it, and they were talking about like the growth curve for subsidies, and they say like once you reach that 5% like market takeover, I don't know if that's the proper term, then subsidies are kind of like unnecessary, because once you reach that point where 5% of the market is in EVs, for example, or solar, then there's really no more need for subsidies, and you have to let the market like kind of let them choose who the best provider is, and the best companies are going to come out on top. Do you think like, what do you think like is the right path for subsidies as far as like subsidizing certain companies, or like, do you think there's any subsidies that are necessary at all, or do you think it should all just be free market in general?
I'm a big proponent of free market. I'm very, I don't know if I would consider myself like a libertarian. I'm definitely an independent. I don't lean left or right. I'm all about free market capitalism. That's what I believe in. I don't think it exists because, you know, you got people lobbying and behind the scenes pulling the strings. I wish there was free market enterprise, but
Right. Yeah. Just to play devil's advocate, like, isn't there like, as far as like people that are just jumping into the space, like, don't you think there's some necessary like government intervention that we need, like, to really boost like solar, which I think they've done a good job in like EVs. Don't you think it's still necessary to like provide like some sort of support to like early inventions and like evolutions of us as a species?
yeah, I do. Yeah, I do for, you know, smaller companies that, you know, actually need the help, for sure. But, you know, you're giving subsidies to like mega corporations that print money hand over fist. I don't like that.
Yeah,
Like Tesla. I hate Tesla.
You hate Tesla?
I hate Tesla.
Like as a company, or just like
as a company, I think their cars suck. Their quality is terrible. Full self-driving is a scam, big scam.
but they're doing it in Las Vegas right now, aren't they?
Yeah, they're running over kids.
Wait, really?
Oh yeah.
See, but I see, like, I don't know. I'm a fan of Tesla, so I guess this is a nice little back and forth. But like, I personally think that there's so much bad stigma around like the self-driving. But like, if you compare it to actual rates of people that are actually like human driving, then the rates are just like the amount of crashes, like for example, are way lower than the average crashes of a human. And it's like they're just trying to pick at it because obviously it's a robot, and I think it's good like for us to obviously pick at it and keep pushing them more. But at the same time, it's like they're doing better survival, like not survival rates, but they're doing less crashes than a human is. So like, is that not better for overall society? And like, is that not going to be the driving factor in EVs and self-driving cars?
I agree there, but not with Tesla.
Okay.
I think Waymo is doing a way better job. Like they have like tests. I forget where the markets are, Arizona maybe, and maybe somewhere in California, where they actually have, you know, full self-driving taxis that you could get a ride with, and like it works. I think Waymo is way ahead of where Tesla is. I mean, Elon's been promising. I didn't you say by this year or next year we're gonna have like 1 million robo taxis on the road or something?
I don't know if he said that. I know he said like the full self-driving beta was supposed to come out in like September. I'm pretty sure. I think that's what he said.
And we're supposed to be on Mars this year, right? I mean, if you look, like I think Elon is the biggest huckster charlatan to ever walk the face of the earth. If you look at his list of promises that he's made and has not delivered on, it's a long list and it's growing, and he just keeps adding stuff. Like people are going to forget about all the other ones he made. It's not going to happen. Like people hate him. They will keep a list of everything he's said and has not delivered on.
True. At least he's trying. Like obviously he's like making these promises and he's like the richest man in the world, but like at the same time, at least he's trying. And it's like, it's not like he has this like reputation that he has to uphold it and he has to do what he says. I mean, I feel like he's just trying to do better for society.
I don't know, man. I got a strong opinion on Elon, and
yeah, I know, I can tell.
So you guys have very different strong opinions on Elon, but yeah, I guess.
I mean, we'll see what happens. But I also hate the fact that, you know, everybody thinks electric vehicles are good for the environment, and nobody's ever seen how batteries are made and how damaging it is for the environment. So I just think it's such a charade. I'm very much an oil guy. So oil's not going anywhere. Like they can try and make it disappear. It's not going anywhere. It'll only make it more expensive. And just like this climate agenda that they're pushing on everybody right now, like I feel like there's an alternative motive and it's money. That's my personal opinion on it.
Yeah. I agree with what you said. I mean, the lithium fields, like, I don't know if there's like screenshots going on. It's just like a whole thing of lithium field and it's covering like, and that's just like so bad for the environment.
Also, the lithium mining on the bottom of the ocean floor is just absolutely horrid.
Yeah. So, I mean, obviously there's pros and cons to everything. I don't know I feel like it's going to be a right balance between, I mean, yeah, gas is definitely not going anywhere. It's like the most efficient, like, source of energy we have. I mean, the freaking, the train we've been doing, what is the word for that? Fuel combustion engine. Is that the proper term for it?
Combustion engine, like in a car?
Yeah. And then like the train, I mean, we've been using that for hundreds of years and it's so efficient. And I just don't see how we're going to like travel to a different like time. Like,
yeah,
where
are they gonna, renovate all of manufacturing processes to not use oil? Like,
yeah.
I don't see it. Like,
It's such a big part of everyone's economy right now. And I mean, we saw like, especially China, like with the sanctions we put on Russia, it's just like we all sanction Russia, but then China's just buying all the oil cheap from Russia. And it's like, their economy's boosting off of it. The ruble like skyrocketed after that.
yeah, the sanctions backfired completely. Like Russia's reaping the rewards from all this. They're like, all right, if you want to sanction us, like we'll do business with other people. And
yeah, there's demand other places.
Yeah.
So I know the market's open. We don't want to take up too much of your time because I'm sure you want to get back to that. But we normally end our podcast with like a final question. So what is one goal that you have in your career, personal life, and what actions are you taking to achieve that goal?
Oh boy, that's a good question. Let's see. Well, I guess for the market is obviously to end the year up. Personal, I'm trying to get into some consulting work right now for supply chain. So I guess my goal for this year is to get that up and running and get that side hustle going, because right now there's a huge market for supply chain consultants. Nobody wants to hire full time. So yeah, I would say getting that business up and running, and if it takes off, maybe I can do it full time and leave my job. That'd be nice.
That's awesome. Leave the 9 to 5.
Speaking of up and running, hopefully Richard Hart gets Pulse Chain up and running.
But, yeah, that was my original retirement plan. It's not going very well. So
yeah. So do you have any recommendations as far as like just books or like handoffs to the audience? I don't know if you have any like websites you can drop your Twitter, just anything you want to share.
Yeah. The only books that I've read, well, I've of course read the Warren Buffett books for investing.
Snowball Effect, is that what you're talking about?
Yeah. Yep. I would say for active trading, and if you're interested in more of like an order flow approach or TPO charts, I would look up Stoudemire, and let me get the name of the book. Stoudemire on Markets, Trading with Market Profile. That book was very helpful. Just learning the basics of, order flow and understanding how to read, the market profile and the auction and everything. That would be my recommendation. Those are really the only two books I've read. I've learned everything in the market just from losing money, experience, and watching charts a lot. So that's the best way people are going to learn, whether that's, just setting up a paper account and practicing, and then just, watching charts. And I would study like if you're actively trading, I would study like a few charts and stick with like a couple tickers. Don't go crazy. Understand how that ticker moves, because each symbol is going to move a certain way and trade a certain way. So getting started, I would focus on like one symbol that you want to trade and just learn that in and out.
Yeah, it's a great point. Like, especially like we shouldn't obviously you can read all the books you want, but if you're not out there actually like doing the work and practicing on hand, then it's going to be hard to learn just from reading what everyone else is doing.
Yep, that's why a lot of people say college is pointless. It's actually work experience that matters.
We did an episode of that college is a trap. So we're basically a lot of those people.
For sure.
So just for the viewers, this was recorded last Friday. So if the market
Friday, August 19th.
If the market goes to zero over the weekend, just know that this was recorded before then. You can find all the links we mentioned, including GTD's Twitter, in the description. And I guess thanks again for coming on.
Yeah, we appreciate it. I definitely had a lot of fun.
Thanks for having us.